Joining me now is Jody Kuzenko, President and CEO at Torex Gold Resources. Great to see you. Thanks for coming in.
Well, thanks. I'm happy to be here.
Now, anybody who follows the gold sector probably knows the Torex name, extensive history. The company came out with earnings just yesterday. But for those who may not be that familiar, can you give us sort of a broad overview of the Morelos complex in Mexico, the track record of production at the ELD mine, maybe a little talk about the processing plant, and excitingly, you've got Medialuna on the way. You're expecting first production early 25. I know lots to get to, but maybe a snapshot if you could start there.
Sure. I mean, it's very exciting times for us here at Torex. We're an intermediate gold producer headquartered here in Toronto, Canada, and our operating asset is in a place called Guerrero, Mexico, in the middle of the Guerrero Gold Belt, which is a very prolific gold copper region with other mines around. In 2023, last year, we were the largest gold producer in all of Mexico, produced 454,000 ounces at an all-in sustaining costs of $1,200. So really nice margins, think really good cash generation. And that becomes important in the story as we talk about the funding for Medialuna. Over at the asset, we have an open pit mine and an existing underground mine called ELG, El Limon Guajes. And with that, we have a 13,000 ton a day processing plant. Today, we produce doré bars. That's how we got to be the largest producer in all of Mexico. And we're excitingly in a very late stage of our Medialuna project, as at the end of Q2, we were almost 80% complete and scheduled to produce first copper concentrate at the end of this year and move into commercial production in Q1 of 25. Medialuna is pretty exciting for us, 3.3 million ounces when we took the reserve. And what that does for us is that it extends our mine life out to 2033 quite comfortably, and we believe there is material beyond that. But also importantly, it gets Torex into the copper game. And so today we're a gold producer with a little bit of copper and precipitate, not much to speak of. As Medialuna comes on to full production, we'll be producing 45 million pounds of copper a year. So a really exciting time for the company as we conclude this project and move to really what we're calling Torex 2.0, the next stage for us.
All right, nicely done. Let's get to those Q2 numbers in terms of production and margins, especially. What's some of the data coming out of that?
In Q2, it looked a lot like Q1. We produced 114,000 ounces, situating us at about 230,000 ounces as we round the corner to the half of the year mark. And that positions us really nicely to deliver on our production guidance. If we do that again this year, that'll be the 6th year running. So I think Torex is reputed for being a really safe, reliable, consistent operator, and we're just keeping up that trajectory. In terms of costs, we're a bit under pressure. With the rising gold price, we see some of our costs go up as well. The legislated bonus we have to pay to our employees and royalty costs to the government go up as well because they're revenue-based. And we've been under consistent pressure for about the last 18 months with the strength of the Mexican peso. So in the early part of this year, we were tracking just slightly above guidance on our total cash costs and all-in sustaining costs. We expect those to come off in the backhand, given structurally what we've got going on with stripping. We expect to be in a really nice position to free cash flow generate again this year. In the last 12 months, on ELG production, we've generated about $250 million of free cash prior to spending on Medialuna, which is a notable number. And that cash flow generation, Mark, has allowed us to fully fund Medialuna, an $875 million build with the revised capex up to $950, without doing an equity raise, without diluting our shareholders, without giving up future upside with a royalty or a stream. We've taken on some modest amount of debt here. We'll exit the build period between $50 and $100 million of net debt, pay that back quickly as we move on to commercial production, and really showcase for the world what the cash flow generation capability of this asset is.
And having said that, margins are still very healthy, above 40%. Right?
They are.
Yeah.
I mean, with the gold price where it is at $2,400, margins remain very, very robust. And so some nice tailwinds there for sure.
Now, Jody, you're building, or you're not doing it personally, but the company, the team, you're building a tunnel under the Balsas River to connect ELG to Medialuna. So when that's completed, what will be the main advantages of that?
I mean, there's so many advantages of the tunnel that connect the ELG infrastructure to Medialuna. Locationally, Medialuna is almost 7 kilometers away from our existing infrastructure, but it's as the crow flies, and it's across a river called the Balsas River. If we had to drive around to Medialuna from our existing infrastructure, it'd be about a 2.5-hour drive. And so we had to make some decisions about how we would access that deposit and responsibly reuse our existing process plant infrastructure. We didn't want to build a mill on the south side of the river. And so as we did our trade-offs, there were a couple of things that we were really mindful about considering. There's always this competing consideration about preliminary capex, how much you spent to build the project, and what the OPEX will be. When you're looking at what potentially is a 30-year mine, OPEX becomes a very important consideration. So you're looking at production efficiencies and driving costs down. The other thing is that you want to be able to access whatever it is that we saw on the south side. So when we took the Medialuna Reserve, 3.3 million ounces, we knew that we were just in our infancy in drilling off what we saw as the Medialuna cluster. We just put out an exploration update showing some of that prospectivity. So we were taking the long view there, which mitigated in favor of spending the money and expending the effort to develop the tunnel, because now we have a way of moving ore, moving waste, moving personnel, materials, equipment, tailings, water, electricity, in and out of that tunnel from the north side to the south side, connecting up that asset in a very efficient way for the long term. And the upside of that is that as we bring on new zones around Medialuna, those will now come very capital efficiently, because all of that infrastructure will have been built in the context of this big heavy lift of the Medialuna project.
Right, it makes sense. Now, you've said that the stock trades at a discount to peers, in part because you're a single asset company currently, but when Medialuna does come online, and you get the positive free cash flow, are you expecting the market to significantly rewrite the stock?
We are.
Yeah?
We are. I mean, where we are today in our journey is that about 5 years worth of work is literally coming together. And so as the gold price continues to do what it does, I expect all gold stocks will enjoy some benefit from that. And I expect Torex to perform disproportionately here over the next year. We have a catalyst-rich year ahead of us. We have exploration coming up ahead of us, which you'll hear about in the news. We have EPO, another deposit coming on after Medialuna, which will solidify our mine plan with the mill full as a 450 to 500,000 ounce producer from now until a very long time from now. We have the conclusion of Medialuna, and a lot of investors hold back when companies are going through big build periods. I think the industry has done a pretty good job of capital blowouts or project extensions, which makes investors wary of investing in a company that are going through that high risk cycle. And so as we conclude Medialuna, and then very importantly for us, Mark, as we return to positive free cash flow on an enterprise basis in mid-25, I think you'll see investors really coming into the name.
Now, let's continue that theme. How do you go about executing in terms of balancing production growth and profitability along with this exploration you're talking about and trying to grow reserves and the life of the mines, basically?
Yeah, we're very judicious about how we allocate capital and very disciplined on that, as evidenced by the fact that we are self-funding a $950 million build. And so we allocate capital to ELG with a view to producing the ounces and creating those margins so we have the cash flow to invest in the future. On exploration, we've invested approximately $30 million a year for the past 3 years with a view to supporting the transition from the open pits coming off and Medialuna coming on. We wanted to make sure we had enough ounces to create some overlap there. And the next order of business was to fill the mill post-2027. Now that those two key priorities are largely solved and behind us, and Medialuna's spend will be largely concluded by the end of this year, we'll have some extra capital available to allocate towards exploration. That was the purpose of putting out that 5-year exploration strategy, so the investment community can see what we're up to and where that capital is going to be allocated and satisfy themselves that it's going to be excellent value for dollar.
The company updated its numbers in terms of available liquidity in the Q2 release. So $346 million, including $109 million in cash and you say that's suffice for everything you want to do in terms of what you're looking to achieve, correct?
Yeah, it is. I mean, the numbers that you just cited, position those against $224 million left to spend on Medialuna. And the project is about 97% committed. All of the contracts really essentially have been led on Medialuna. So all of that risk has now been managed. And so we have more than sufficient available liquidity to finish Medialuna, continue funding exploration, and then when Medialuna is behind us, at spot prices, that asset will do about $350 million a year free cash. And so we will quickly pay down debt. And then we have cash to do other things. We can either double down on exploration, we can turn our attention to M&A, which we have every intention of doing, and it also creates the opportunity to return some capital to shareholders. We have some shareholders who have been with us for a very long period of time, since the beginning, and once Medialuna gets behind us and we see that free cash flow coming in consistently quarter after quarter, year after year with no end in sight, it will be time to put in place a responsible return of capital program.
Speaking of M&A, Jody, a nice segue. You've been very upfront about, yes, we're always looking to diversify, either in Mexico, maybe in Canada, the U.S. Are you going to break any news for us today, or and can you hint at anything maybe, or what's going on there?
No, I'm not going to break any news, but we're definitely looking, and we know we have been. One of the overhangs to our stock is the fact that we're a single asset in a relatively complicated jurisdiction. And so what we want to do ultimately is diversify that risk and add another asset to the portfolio. And now is starting to be the time that we can be really serious about that. With Medialuna behind us and all of that cash generation capability in sight, our stock poised for a re-rate, we'll have the paper to be able to support that kind of transaction. We're looking in the Americas. And what I will say, Mark, is that we've worked so hard on having such a good go-it-alone story, and we always wanted to be doing M&A from a position of strength, not a position of weakness. We wanted to know that we had production and cash flow coming ahead of us, and so we could be judicious, we could be patient, and wait for the right deal at the right time. So we're actively looking, and you can expect us to close on the right one at the right time when it comes along.
All right, sounds good. Let's shift gears to ESG. You've said that the company has been basically engaged in that since before it was even cool or even a thing, even an acronym.
Yeah.
And it's in the company's DNA. So in terms of community, the environment, and safety, what's sort of the overriding philosophy?
We had to be good at ESG. I've already said we operate in a complicated jurisdiction, and so we're not the kind of company that's all about acronyms and box checking. It's just not what we're up to on ESG or DE&I or anything like that. But in areas that enable us to appropriately manage risk or to be better than the next guy, that's where we have doubled down on matters of ESG. So the examples I would give you are safety. I mean, we run an operation that has about 1,200 direct employees, another 2,000 contractors steady state. Today we have another 1,600 as we build out the Medialuna project. And I'm very, very proud to say we're closing in on 17 million hours lost time injury-free at our El Limon Guajes assets. And so that's a calling card for us. It tells you something about the discipline with which we run that site. And it's important for investors always, I think, to look at safety metrics, because if you see a company that's messy and sloppy on safety, that's likely to translate into production, which is likely to translate into cost discipline. When you see a company that's the opposite, that tells you something about the discipline with which they execute systems as designed, adhere to rules, and in our case is a great example. It translates into production discipline and cost discipline. So it enables those results that are consistent quarter on quarter. Community is another big one for us. Mexico is well known to be an area that has blockades from time to time. We have been operating blockade-free for years now, and one of the reasons that is so is because we take community relations, employee relations, union relations, local political relations, ejido relations very, very seriously. We are in the communities. We see ourselves as guests of the communities that host us there, and that's our stance. We're looking to leave a net positive legacy in the communities in which we operate. And when you come in with that kind of mindset, people endorse your project and they endorse your operations. And many of them are working for us. Almost half of our employees are from the local communities. 99% of them are from the country of Mexico. So we've got people who literally understand the culture and speak the language.
And on another front, you've said that 43% of the executive team and board is female. And you've also said that mining is more complex now and a collaborative leadership style is beneficial. Can you elaborate on that a bit?
I think that's true. And I mean, those two things sometimes go hand in hand, but I also know a lot of male leaders, many of whom work at Torex, who have very collaborative leadership styles. I do think that the industry itself has become more complex in the last 10 and 15 years. Society demands more of us. Certainly local communities do, indigenous communities do, politicians do, regulators do. And so gone are the days when the important things were just drill, blast, and muck. Now there are many competing demands on leaders who operate in the industry. And gone are the days also where a command and control structure works very well because there are just too many swim lanes going on. And so at the top of the house, I know because I sit there, you have all of the authority, but not necessarily all of the information. And so what that calls for is collaboration. Are you working with your community relations team, your exploration team, your environmental team, your political team to ensure that as you're moving the business forward, your weakest link comes along with you? And in terms of women leadership, I mean, as I said, we don't have quotas, we don't check boxes on things like that. What we do and are committed to is creating equality of opportunity. Not equality of outcome, equality of opportunity. And so we have very tight processes where we open up the opportunity for jobs to both men and women to apply instead of, for example, hiring golfing buddies or sons of golfing buddies. And when you do that, when you open up the aperture and invite both men and women to apply and are disciplined about looking for competence instead of confidence, those two things are very different. When you do that, it turns out that half the best people for the job are women, about half of them are men, and that's the way we've approached it at Torex.
Right. Lastly here, Jody, you've talked about gold prices near all-time highs as we sit here. So against that backdrop, wrap it up with a bow for us and for viewers in terms of the investment case for Torex and the catalyst going out into 25.
Oh yeah, thanks for the lob. That's
Yeah,
an easy
exactly.
job.
That's an easy one.
I mean, gold prices at an all-time high is just the gravy on the train for us. And so over the course of the next year, we will conclude Medialuna. We will get into the copper market. We'll finish it on the revised budget. We'll produce first CopperCon by the end of this year, move to commercial production in early next year. So that big risk will be behind us. We will, I expect this year, deliver on production guidance out of ELG for the 6th year in a row. So keep that cash generation machine moving. I expect you'll hear good production or good exploration news out of the company over the coming year and 2 years as we continue to fund our exploration strategy. We will bring on another deposit. You'll hear about that in early September called EPO, which bolsters our life of mine plan for the longer term. And so I would wrap it up by saying Torex is a company that delivers on its commitments. We say what we're going to do, and then we do it, and then we say what we're going to do next. And I think that sets us apart from our peers and makes it a really attractive investment.
I think you hit that one out of the park. There you go. Very good.
All right.
Thanks, Jody.
All
Good
right.
stuff.
Thanks
All
for
right.
having me.
Jody Kuzenko, President, CEO at Torex Gold Resources.